Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. Global markets rattled today with a few bids ultimately giving way mostly to bearish sentiment. It's a bit of a mix, really. This after China announced retaliatory tariffs on the U.S. Here at home in Canada, the ongoing trade war has pushed the TSX Composite to an 8-month low. As market uncertainty persists, which Canadian strategy perhaps is our next guest adopting? And which pockets of the market might Canadian investors want to focus on moving forward? Joining us now to unpack the Canadian equity landscape and to provide an update on Fidelity True North Fund is Portfolio Manager Max Lemieux. And Max, hello to you. First of all, bonjour, glad to have you with us.
Good morning, everyone.
Okay, help us through this, Max. This is a wild day, but it's day what? We don't know. It's been a lot of days stacked on top of the other. To what extent did you see some of this coming?
Well, Pamela, I think earlier this year, we've mentioned to pretty much everyone, all the unit holders of Fidelity Funds, we were prepared since last summer in terms of getting ready. What if Trump was going to be elected? And then, what's the potential impact of tariffs on the different sectors and all the companies that we own and the ones that we don't own. So we have to measure, it's our job to measure the downside and the upside of every company we own and what is the impact of that. So that's I would say we were prepared, unlike COVID, where COVID, we were probably a little bit complacent. It was mostly an issue for Asia and Europe. And then, it happened in a matter of days. This time around, we got to know Trump during his first mandate. And then we did the work before the election. For sure, some of us would have doubted about the magnitude of this ongoing trade war. But to come up with tariff obviously was not necessarily completely unexpected. And we, as Canadians, we've tasted this first, probably because we're close friends. And therefore, we'll see how this will evolve. But again, I think for the Canadian economy, we have to be mindful that this will continue to be an uncertain time for the next couple of months, maybe for the remainder of the year, in terms of back and forth dealing with the Trump administration. We have to wait, obviously, for our own leader, who's going to be occupying the new seat as a prime minister. So we'll know this within a month. I think what's encouraging, despite this current chaos, the call between Carney and Trump that occurred, I think, 2 weeks ago, when basically Carney being, answered by the name of prime minister as opposed to governor. So I think we're probably going to see some improvement. And I would still like to believe that in this whole geopolitical mess, that Canada is still very strategic to the Americans because we're a huge natural pool of cheaper energy.
Right.
And if the Americans want to isolate themselves completely from the rest of the world, a completely closed economy, at some point, they might not have all the reserves that we have down the road. So again, we'll see how this will evolve, but I think tariffs in a broader spectrum in the world, we see what's going on tit for tat with China. There's a lot of egos here, but there's no doubt when you read about Trump's thinking about China, we saw it during the first mandate, and one of his key advisor, Navarro, I think in their mind, again, it's own personal view, but in their mind, their main concern, key target is China, and everything that they've been doing so far. It's about trying to make China feel more isolated. But at the same time, if the Americans retract from the rest of the world, that's going to have a huge impact also on multinationals. I mean, remember, more than 40% of the earnings of the S&P 500 comes from international. And I don't know how Mr. Musk feels these days, or all the other companies that are close to Mr. Trump. So it's a bit of a chaos. It's a new world order.
But Canada's got a good place from an investment perspective in it.
Yeah, and listen, I want to reassure people that we still live in capitalism. We still have a market of might be only 40 million here, but there's still Europe, which is close to 300 million. We also have a free trade with Europe that was negotiated a long time ago. And we've seen some politicians from Canada crossing the pond just to go visit some countries in Europe, and we'll see what can be done there. But obviously, Canada's been naturally complacent over the past 20 years, thanks to the first free trade signed in the late 80s with Reagan and Mulroney. And this was just a natural market for us. But the whole idea is we have to continue to diversify. We are a smaller country, but I think that, there was a big financial conference a few weeks ago here, and they were great panelists, and we learned a lot from the CEOs of the largest banks. And clearly, it's a wake-up call, and there's a lot more infrastructure that could be done here, more diversification from the point of view of trade, and we'll see. We might still be in very good terms, and I think Canada and the U.S. will never necessarily be apart because it's. I
Or
think it's two
attached.
advantages for one and another. But again, this is common sense here. And there's a lot of hot-headed people right now in down south, and we'll see how that's going to evolve. But the work that we do is to ensure that the companies we own can go through a turmoil. And again, we don't know if his speech or his narrative can change next week or a month from now. I think he's really on these tariffs. He wants that to stay. He's after China. So I don't think that premise will change very much. But could the magnitude of these tariffs change? And maybe it's going to be a deal country by country. They have to do a lot of deals.
Yeah, I
There
know.
are
Where does
160 countries.
NAFTA fit in if we have to renegotiate USMCA, NAFTA, whatever we want to call it, CUSMA? It looks like it needs to be renegotiated. I don't think too many people think it doesn't, but they got some other fish to fry right now. They'll be a
Yeah.
bit busy. Are we gonna get a renegotiated
What
NAFTA
is?
even after our election?
Yep. Listen, Pamela. It's again. I'm not an expert in politics, but I could also foresee a scenario where maybe they're so busy dealing with China, India, Japan, Korea, and Europe that maybe they're
Just
just going to
stamp
keep
it. Say
Canada and
it's okay.
Mexico
Yeah.
as is for now, and we'll deal with this later in 2026. Remember, they are running the risk that the more uncertainty you have and the longer it persists, we're starting to see this with credit spreads in the US. It's really starting to widen quite a bit. And it's going to paralyze the economy. And if the consumer starts to become a lot more fragile in the US, people being laid off also thanks to Doge, and maybe a lot of companies, instead of going ahead with these large capex programs, they might put it on pause because they want more visibility. So it's almost like, is it possible that that administration just want to tank the economy first, have a reset, and then get ready for their midterm election in 26? But the longer you wait to have all these deals and settle the framework, it might create more damage on earnings growth. And remember, stocks will follow earnings, and the S&P 500 at 18 times earnings, downside could be 15 times, 14 times, depending on what we see on the earnings front. But we've seen companies like pulling guidance. Earnings seasons is starting this Friday with large American banks. We know in Canada, having spoken to all these CEOs recently, it's on pause for a lot of on the credit side. They don't necessarily see their book seems to be stress test. They seem less worried than they were 2 months ago when this whole thing got started. But earnings might not grow at the same pace for the time being because we're changing the whole supply chain. That's the other issue. And at the end of the day,
how are you
because it's
investing in
happening
that?
so fast, it means inflation. I mean, I don't buy the fact that his administration claimed that it should not create or trigger more inflation. Anyways. I don't want to go that fast.
Well, okay, so we'll talk about that in a sec. But so can you invest into changing supply chains? I mean, we know about the reshoring. That's actually been a conversation since COVID. But how are you going in to invest in companies, presumably with a bit of a defensive concern about everything, but also looking for opportunities of these changes?
we have to be selective. We have to be tactical. Again, uncharted territories. But if we know that the impact means probably pressure on earnings, we have to look at companies like if it was a potential recession. And then for sure, we have to be on the defensive. Um, we have to be, the cash level has gone up a little bit. You want to keep some dry powder just to be opportunistic. When we start to have days where market is down 4%, sometimes there's dislocation because we've seen over the past few weeks, hedge funds margin calls, the leverage in the system is coming down in the financial system. I mean, from the financial actors.
Yeah.
We see also dislocation on long-term interest rates that go up as opposed to going down. Right. So it's a lot of things, indicators to watch for. But I think to play defense, gold, as you know, as of December, it was a decent exposure for True North. I believe it was maybe 8 or 9%. But you look at gold versus the cryptos. We've talked about this in the past, and I always had a preference for gold. And again, it's a very subjective instrument, but for once in the recent history, I would say it's acting definitely more as expected, given the turmoil that we see in the world and a lot of foreign countries being a bit worried about the US and how they're going to be treated. We see this trend on gold that at least maybe it's just going to be a plateau, but it seems to be a defensive place. Again, the valuations of these equities, gold equities, have not really recovered from the heydays from 20 years ago during the super cycle. So that's another place where you can take a look. Like there's also the utilities, which are defensive. And no matter what happens, that there are also like pipeline companies, like there are different pockets also. And I would say most of the market is not necessarily impacted by the tariffs themselves, but it's a second derivative. What if there's a slowdown? What if earnings come down? Then you have to look at companies also in the consumer staples, like you and I might definitely reduce or stop going to the restaurants, but we'll keep going to grocery. And that will continue to be, a source of earnings growth, especially if there's a bit more inflation. Typically, it's also good for grocers. But it's really stock by stock. There are companies that continue to be on the lookout for acquisitions. We have no idea if this Japanese situation between Couche-Tard and 7-Eleven will work out.
Does it matter? I mean, it matters, but I mean, does it matter to the stock for you?
Well, the stock's been punished quite a bit.
Yeah.
And when you look at the premium for 7-Eleven, now it's trading 35% below the bid that was offered by Couche-Tard. So I think the market is telling you that it's not going to happen. But the reality is that as long as people have a job, they'll continue to go to a convenience store. And in the U.S.,
again,
tell
us about the U.S.
We have to look out.
Yeah.
In the U.S.
it's a globally exposed company. So yeah.
Yes, and the southern U.S., as you know, it's a territory where there are a lot of deportations, and people are staying home. There are illegal immigrants that don't want to get caught. They're not going to go to the convenience store, and usually that was a frequent, a place where they would go frequently. So we hear this from the companies, and that's what we do all day long. We keep speaking to the companies. We attend the conferences, and as you know, the incremental data point that we get from companies will help us to navigate this. And that's why, exactly like COVID, we have to make sure that we're on it and we don't miss a beat.
So it's interesting that you compare it a little bit to COVID. Let's just talk about the Canadian sort of interest rate landscape right now. We've heard from Tiff Macklin that to an extent they'll step in and help when they have a bit of a clearer picture, I guess, of where everything's going. That's everything's happened so quickly that maybe that's not clear yet. But that said, I mean, are you looking to be in or out of interest rate sensitive areas of the market? I mean, again, do you not want to play there at this point?
Yeah, listen, it's hard to say where long-term rates will go in Canada. I think the short-term rates probably will continue to go down, but at some point, the inflation cannot be controlled. I mean, I think that different central banks have different mandates. And, for sure, if there's a crisis, I think the market expects that the Fed in the US and Canadian central banks Bank of Canada would probably intervene. But the reality is that they have to wait for worse unemployment. And in Canada, it has started. In the US, we're just getting started, actually. So it's possible that Canada will be a bit more aggressive and they might be a bit more lenient on the inflation front. And, furthermore, it's not necessarily Canada that has started to impose barriers, trade barriers. So, we might not necessarily have the same inflation. And we have to watch also for the direction of the Canadian dollar. And so far, after this first tornado, the Canadian dollar has been settling, into that range 140 to 145, but we've not touched, early February levels of 148. So I
What do
think
you
that's
think
good
about
news.
investors sort of around the world taking a look at Canada? I mean, this is part of the foreign direct investment story, but I mean, yeah, the currency is going to make a fairly big impact on that.
Yeah. I don't know what's the latest flow in terms of foreigners coming into Canada and the sovereign funds. But again, if we fast forward the movie and let's say that one believes that at some point we have this new geopolitical order, and if Canada stays in this economic North American association where you can be a supplier, a reliable supplier of energy, I think Canada will remain a place to be. If Canada can play its cards well and get more active with Europe, and we'll see what's going to happen. Like, could there be new type of associations, like better trades, more diversification on that front, so that you'll have to watch earnings growth and Canadian companies that, as much as in the past we were talking about, it's great to be global, to have a lot of companies that are more global now than before. At the same time, we have to pay a lot more attention to what are the potential impact for their foreign earnings.
Right.
So I think there will be also probably, as a result of this, probably even more infrastructure spending in Canada. They'll have to protect the Arctic. There's going to be more money spent on defense. It's not that there's a lot to play with in Canada in terms of army, military related type of spending, but there are a few plays. There are also like on terms of space, right? Satellites. Canada has a couple of companies involved there.
Oh, space.
So
You mean like space? I thought you meant like our wide open space. You mean, yeah.
No, I mean
up there.
Satellites.
Yeah.
So this is so it's not that even Bombardier, you would think that it's interesting that they've never been selected in Canada for having some of their aircrafts involved in surveillance, but they are used in Europe, and the U.S. military use also Bombardier's jets. So again, we have to think outside the box, and sometimes it's not necessarily number driven. We have to use our intuition, and we have to hope that, again, the midterm elections are in 26. They cannot keep that chaos going for more than a year. So I'm just saying we have to be aware of this could last a bit longer than people think. And at some point, things should get back to sort of normal. And that's what we do all day long. And
with Canadians buying or being more open to buying Canadian products, are there certain sectors that actually that's material to? Take us through some of the sectors.
Well, listen, anything related to commodities, it's very much a global
they're priced globally.
Pricing system, right? Unless you have tariffs. Like there were rumors that the Americans would put a tariff on copper, on gold, etc. Like, we'll see, but they don't necessarily have all these resources on the get-go. Like, to build a new mine, it's a long time just to get the permitting, etc. So I think that anything related to the consumer, again, we have to be mindful that people will continue to consume, but they might not buy a new car, right? So we're not involved in car parts manufacturing. I think, one of the sad consequences of what's going on in the US is that the US automakers are likely to lose more of the emerging markets trade, and the Chinese will take over this because the Chinese will have a hard time to export to North America as well as the whole Western world, including Europe.
What about resources? If the consumer, in your mind, is maybe in trouble, we're not sure yet. How much goes into sort of the infrastructure building? You've mentioned that, and also resources. I mean, can you sort of put it that starkly?
Listen, again, it's hard to tell what will be the new government do on infrastructure. But everybody's talking about pipelines, et cetera. Like, I
Right.
mean, we have to dissect, make a difference between oil and natural gas. I mean, we still have we're still of the view that natural gas is a bridge towards a greener world. You know, in 4 or 5 years, if there's a new government in the U.S., the younger generation cares more about the environment versus the older generation. So I don't think that this long-term trend will vanish. And I think that that's where you have to pick your spot at a certain price. I mean, listen, oil is at $57 today. Could it go at 50? A lot of Canadian companies are still profitable, but below $50, if the world freezes, like we've seen it during COVID, and that's not what we're expecting. But if it were to happen, at some point, it's not necessarily our companies that will have to cut back first.
Right.
And the price there'll be a clearing mechanism at some point. And one has to remember that in Canada, when you look at the federal debt and the provincial debt, like combined, we still have some room for extra spending. I think the US is a little bit different.
You mean to
And
invest
Europe,
in infrastructure type projects, that kind of thing?
yeah, and Europe will have this own spending on defense, right? They'll have to spend a lot, and we'll see if Canada can also take advantage of this. So there'll be different opportunities. Like so, energy, we have to be careful also about. Maybe you don't want to own the commodity in the short term, but there's all the transportation related to energy, the pipelines that will benefit. LNG Canada is starting, this year as we speak. There'll be more LNG projects along the way over the next 5 years. And that's, as I said, I think it's the main source of energy to bridge towards a greener world. Uranium, we'll see what happens there. But even if we've not talked about what's happening in Ukraine, but if there were a sort of peace
war were to
agreement,
end, yeah.
Uranium is not something that the Russians have a ton of, so it doesn't really have an impact on uranium. I mean, it's mostly Kazakhstan and Canada. So you still believe that we'll have more data center for sure. However, it was insane the enthusiasm or positivism about how come these valuations on certain stocks tied to AI and data centers were just through the roof. And at some point, you've got companies like Microsoft that tell you, well, listen, we'll have to be pruning our capex, and now we'll be a bit more mindful of what is the real return on that capex. So at some point, I'm just saying, like, we have these mini bubbles of excess. And
that
then
seems so long ago, that
back.
announcement from Microsoft, because so much has happened.
Yes, it's buried somewhere, but it's.
So we spoke a little bit about the Canadian, but there seem to be some questions around a U.S. currency devaluation on a more permanent basis. Again, does it affect how you invest ultimately? The universe for your fund, just remind us. I think it's mostly Canadian, but.
It's 90% Canadian, but as I said earlier, right, there are a lot of Canadian companies that are global as well. But I don't know if there'll be a Mar-a-Lago type of accord that we saw, like people refer that to the Plaza Accord back in the 80s. But we'll see. Anything's possible. But listen, in Canada, we've seen the ups and downs of the Canadian dollar, so I'm not too fussy about it. Like we'll deal with it, and usually our currency will trade in line with what's the interest rates differential with the U.S. and where's oil trading. Right. So that's typically the two key variables.
Tell us a bit about the financials. I mean, the big discussion, of course, around the election of deregulation in the United States. Some of that will have an effect, perhaps, I mean, thinking sort of Basel III piece of it will have a bit of an effect in Canada. What is the outlook for financials from your perspective in Canada?
Listen, if there's one area where we will probably see more deregulation due to the Trump administration, it's financials. And we have some Canadian banks that have decent exposure to the U.S. market. And we also have some life insurance of decent exposure. For the time being, I think that in True North, where I think we've maneuvered quite well was to be in the PNCs, right? Property and casualties. So you look as of December, right? The holdings in Fairfax and Intact, they've done well. They're more short-term driven. If there's cost inflation for car parts, like we'll see how that evolves, but they can change their pricing for the premiums on a yearly basis. It's it's not a very long tail, and they're well-managed companies, right? Unlike the issue with the banks is you have earnings slowing, and then it's a question of valuation after that, right? Because they have good capital ratios, but as you said, maybe their U.S. divisions, TD has to sort out its own AML issues, but once it's done, we'll see what happens to, it's probably going to be a replay of Wells Fargo after a couple of years. They have they'll get back their full license to grow at a normal pace. But this whole idea was maybe they can improve, get some benefits from that deregulation in the US, and therefore more capital that could be returned to shareholders. So again, it's slow in the making, but it might be a source of positive news, but I don't think that we're there yet. But that's why you don't necessarily want to be completely out of some of these names, because first of all, the valuation is not at a low point. It's average. They've corrected somewhat. They were, great stocks to own in Q4 last year, but we're still careful about what might happen on the potential provisions for credit losses. So I think we still have a bit of time. But again, things can move quite fast.
Yeah,
the market went down like 10% in a few days. So at some point when you hit recessionary level and you feel you had the floor earnings, and we're there, if you believe that you have a decent domestic economy, and that maybe there could be more that could be done from different governments, we'll see. We'll see how that's going to pan out.
Max,
I wish I had more precise answers, but it's all in flux.
No, you've always been the one to invest in Canada in the way that probably we all think we know what's going on in this country, but you've actually been able to do it so consistently. So we'll trust that you saw some of this coming. It's played out somewhat the way you thought it would, and you're holding on for better days. But yeah.
Yeah, but hope is not a good strategy.
No,
we have to be. We're working around the clock. The analysts send us, daily updates. What's the downside for every single stock? Are we close to it? And maybe we're through it, but there's still too much of a dark cloud above, and we have to wait a little bit more. And then it's very hard. I've seen it many times in my career when we're going through very stressful moments, periods where the VIX, the volatility is really high, credit spreads blowing up, and it's not in our control here. It's not even the economy. It's based on policies. You have to keep a cool head, and at some point, you'll see when it starts turning, you have to start buying, but keep some ammunitions, because it's very hard to pinpoint, is today the low.
Right. Max, we'll leave it there and leave it in your capable hands. Max Lemieux, thank you for joining us today on Fidelity Connects.
Thank you.
Thanks for listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/how-to-buy for more information. On fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.